Kenya is experiencing its biggest economic challenges in years. And this started even before President Ruto took office some 3 years ago. It has been an issue of national debt. Kenya's debt to GDP ratio is over 70%, with high repayments due to loans from China and the Eurobond and from the local economy. So the biggest chunk of revenue in the country goes into servicing loans. That's why they brought in that finance bill last year to raise money to service loans. Last year, Kenya faced serious liquidity pressure with debt servicing, which caused their currency, the Kenyan shilling, to lose between 25 to 30% of its value against the US dollar. This made imports expensive and prices started to shoot up. Kenya is suffering from what the previous government of Ghana took us through: excessive borrowing and investing the borrowed monies into non-productive projects, which caused the downfall of our local currency. This is the exact playbook President Ruto is either following or experiencing as a result of bad financial practices of the previous regime. But today, ladies and gentlemen, Ghana seems to have figured it out under a new administration, even though it's still early to conclude. This type of economic situation can be resolved under an introduction of an enterprise that will bring new stream of revenue into the Kenyan economy. This is not about contracting more loans to settle previous loans. No, it's about the government looking for a new source of revenue from within without resorting to taxes. This is what the government of Ghana is doing. That's helping our economy. And I'll share that with you, ladies and gentlemen. They are implementing a mining law that allows the government of Ghana to buy 20% of gold mined in Ghana from all large-scale gold companies or miners with our local currency, and then sell it on the international market for the US dollars. It is working alongside a strict financial discipline. Ladies and gentlemen, this has within 3 months appreciated the Ghana cedis between 35 to 37% against the US dollars. And just because the cedi appreciated, we have saved more than $14.6 billion in loans. Kenya, you need an in-house plan to generate income for the state, or else you will perpetually end up in the circle of contracting loans and contracting more loans to service previous loans.